Hello friends, this is Raj Sastry from Raj Option Trading. Today is April 30, 2022. Let's take a look at my favorite stocks with earnings pullback. So we got here Amazon.com, stock pulled big time, and we got few more stocks which pulled big time after the earnings announcement. So let's take a look and go from there. Look, we got few stocks here. First one is Apple. Apple's service revenue climbs 17% to record 9.8 billion, and iPhone sales slows. So that's why Apple stock pulled back a little bit, even though their service revenue climbed higher. And then you got Amazon.com. Looks like stock really big time down here. Stock suffers worst day in more than 15 years with the $200 billion wipe off from market cap here. So it's a big drop in Amazon.com. Let's see if it's good to buy this company up here. And then you got Intel. Intel also dropped big time, and Intel has got a relatively new CEO. He can take the company to greatness as we go forward. So this one could be a good one to slowly buy. And then you got KLAC here. KLA, they beat on the earnings, but there is some supply chain concern. That's why stock came down here. And then you got AbbVie. AbbVie is one of the great pharma company. I think it's a good one to buy after this pullback here. And then we got Netflix. Netflix bounces after dropping big time. Netflix could be a good one here. I think they're going to fix the issue around the password sharing. And I think this company is good to buy after this huge drop. And finally, we got Chevron as well as ExxonMobil. Both are dropped. I think it's good to buy both of these names here. I think they will do very well. So with that, let's jump in here and look at Apple in little more detail. Apple is one of my favorite stock. I've been buying Apple as it dropped. Look at the nice run here. Great growth here. Stock is performing very well. And often Apple gives you nice opportunity to buy. Look, we got here 2020 April March time frame. Stock dropped big time, COVID worries, and then again it dropped once again, dropped again, and now it's dropping. I think it's a great time to buy some Apple here. Apple, time and again, they're going to out innovate the competitors and come up with a rock solid simple product. And people who use Apple, they love Apple products, and they always go for Apple ecosystem. Buy iPhone, buy iPad, buy Mac, and so on and so forth. So it's a great ecosystem. Apple will do very well. All right, let's look at Apple in a 1-year chart. Look, we got Apple here. Stock is after the earnings, stock pulled back slightly. I think at these levels is a great time to buy some Apple. I think from now on it should slightly go higher as the market stabilizes. And look, from a volatility perspective, still very high volatility. If you're a put option seller, you could sell some put option way below the current stock price and make some money. RSI is cooling off of late. That tells you momentum is slowly fading away, but I think it's trying to go higher as we speak. And then you got volatility. Volatility dropped, which is very typical after the earnings. And look, we got here a bullish crossover in the formation here. The red line wants to come down and blue line wants to go higher. That can result in a bullish crossover, which is a very good sign. And then you got volume average pretty steady here. I think this can go higher. And take-in money flow, look, that's going down here. That tells you smart money is pulling out of the stock right now, which is very typical after a drop. This can reverse, just like what happened. Look, we have right here, take-in money flow dropped. After stock dropped, then it went back up again. That's why smart money is waiting now. As the stock stabilizes, smart money will go into the stock, and this take-in money flow will start going higher, and stock will also bounce back. All right, now let's look at Apple, a quick snapshot. Look, Apple is a big company, $2.6 trillion market cap and $163 stock price here. And it's got a lot of employees. Look, 154,000 employees, and per employee Apple is making $2.3 million. That's a good revenue per employee. And look, it's a very strong buy from analyst recommendation. It's a fundamentally strong company. And look, it's in multiple indices. It's in Dow Jones Industrial Average, S&P 100, 500, and so on and so forth. And it's been doing very well. Look, it's done great in 3 months and 6 months, and in 1 year it's done 22%. And look, 2 years, 5 years, and 10 years, it's handily trounced the S&P 500, has done very well. From a sales perspective, respectable sales here, $378 million in sales. That's a great number here. Even up this big company here, nice sales growth. Look at the 5-year, 1 year, quarter-over-quarter sales growth. Apple is a growth company. And next year sales is pretty healthy here. Nice next year sales, and next year EPS growth is also great here, 6.6%. And it's a profitable company with nice return on equity and return on investment as well as return on asset. And look, this company has got a net margin 27%, so it's a profitable company. And they got a lot of working capital, as you can see here, $5.5 billion. And they're paying a low debt for their huge debt load here. Look, they got $122 billion debt, but they're paying a very low interest rate. I think they locked a low interest rate. Apple can get this very easily. Free cash flow positive, very healthy free cash flow here. And look, from a moving average perspective, right now it's in a negative stage here. It's below its 20-day, 50-day, as well as 120-day moving average, but it's about 200-day moving average, which is slightly bullish. As you scan through here, we got Morningstar ratings, nice high financial grade A. And we got here health B, growth B. I think overall it's good. Even profitability is B here. I think that's a great rating, and it gets an overall rating of 75. So with that, I think Apple is a great buy here. I would slowly add and buy some Apple here. All right, now let's look at a little more detail and go from there. Let's look at yearly numbers of Apple. Look, nice earnings per share. Company doing very well. It's a company earns money. Nice trajectory here. I like the clip here. And from a sales perspective, even this huge $2 trillion company, look, they're growing nicely here. Nice sales growth. Top line is growing here, and shares outstanding is coming down. This company is not diluting the share count. They're actually buying back share and reducing the share count, which is always great. Operating margin is slightly in a downturn here, but they picked up. It went higher in 2022 here. That's very good. Net margin is also went high, as you can see here in 2022. And total debt, I think this Apple is really bulking up on the debt here because they get that very low interest rate, but now it's kind of stabilizing, which is good. I think they should reduce their debt load as we go forward. I think they're already doing it. We can look at that in the next slide here. All right, now let's look at the quarterly number. I always like to look at quarterly number in addition to yearly number. So we got all the quarters on the top here. Look, we got all these quarterly numbers here. And we got here latest quarterly earning back in the 12/31 quarter. And look, we got nice $2.8 trillion market cap here. And we got share price 177. But look, after the earnings, stock came down. And right now, stock price is 157. And market cap dropped from 2.8 to $2.5 billion. So that's because of this sell-off related to earnings. And sales is doing very well. Look at the sales growth here. Nice sales growth quarter over quarter. That's good here. It decreased slightly, as you can see here. But if you look at 12/31/2021 to 12/31/2020, all the way right here, 2020 here. Yeah, I mean, it's slightly low here from 21% to right now it's about 11%. So it tells you iPhone sales is a little bit slowing down. And as you scan through here, it's a earnings surprise, nice positive earnings surprise. I like it. They got a lot of cash on the balance sheet. That's also great. Total debt, as you can see here, it's reducing. Look, it was 124 billion, and now it's 122 billion. I think they're trying to reduce it. You can also see that in the debt to equity, it was 2 last time, and now it's 1.7. It's in the right, trending in the right direction, which is very good. Free cash flow, it's great. Look, it's increasing from last quarter. That's great. Operating cash flow is also increasing. Gross margin, look, margins are expanding, which is great here. Even amid of all these supply chain concerns and issues, Apple is able to hold on to its gross margin and expand it, which is great. Net margin also nice expansion here, about a 3% expansion. That's great. And this company is spending money on research and development. That's also great. And as you can see here, earnings per share 29.5, which is lower than the prior couple of prior quarters here, which is great. I think it's also becoming less pricey. And look, from a price to sales perspective, it's not very expensive. It also pays some dividend. And one thing we did not cover is share dilution here. This company is really not diluting the share count. It's keeping it pretty constant, actually reducing slightly, which is great. So from a quarterly number perspective, Apple checks out, and Apple also checks out nicely from a yearly number perspective. All right, so from a earnings history perspective, look, Apple announced the earnings just a couple of days ago, and they have a nice earning beat by 9 cents, and actually revenue beat also, nice revenue beat here. And I think this company is doing well. Look, historically, this company has got always had nice earnings surprise here, almost positive almost all the time, and some one in line, as you can see here. From a sales perspective, sometimes at least once here, company missed on the earnings estimate here. But overall, this company is very predictable. That's why Wall Street loves this company. Even in this big company, look at the revenue growth here. They're able to constantly grow the revenue here. That tells you Apple is really doing well from an innovation and sales perspective. All right, now let's look at, let's conclude what should we do with Apple now. Look, Apple's product just work. That's why the customers love Apple product. Once you buy an Apple product, you are a loyal customer. You'll expand and you'll buy other Apple product, and you got a great. You'll fall in love with the Apple ecosystem. Apple has earned the credibility of the customer by providing strong security as well as privacy. That's why people love Apple, and Apple is a game changer when it comes to security and privacy. And Apple's revenue, sales services revenue climbed nicely here, 17%. That's a great one here. The iPhone growth is slowing down, but they're picking it up on the services side of the house. And Apple has got some COVID-related issues in China that's impacting the Apple. So we'll see how it goes. I think that should get better as we go forward. And the innovation engine at Apple is humming nicely. They got Apple Pay, Apple Watch, AirPod, iPhone, Mac, you name it. It's a great ecosystem. I say you take advantage of this pullback and buy this great company. Tim Cook is leading the company nicely. I think this is going to be a $3 trillion company pretty soon. So with that, go buy some Apple. It's a great one to buy during this pullback. All right, now let's look at next company here, which is Amazon.com. Look at Amazon.com. Look, during the COVID days, company did very well. Look, it surged nicely. Multiple expansions, as you can see here. So what's going on is after that, it's kind of, consolidating nicely. Small uptick here, not too much. But now look, we got here 2022 here. 2022 is not kind on Amazon.com here. Amazon came down big time after the earning. Look at this big red candle. Stock came big time down here. So at this time, you got to see if it's worth buying Amazon.com here, given huge drop in the share price here. All right, now let's look at a 1-year chart. As you look through 1-year chart here, look, Amazon, we got earnings here, drop during the earning, then stock came down slightly, went higher. Now there's a huge drop here after the earnings. I can see the stock going higher. Amazon has got a lot of pricing power, and this company can increase very easily increase Amazon price, and they can basically pass the inflation along to customer. Then its stock can go higher. So it's not a big deal here. It's a great buying opportunity. And also look here, there is a 20 stock split coming up here. You'll get 20 shares for one stock. That's a great one here. That can also have some positive impact on the stock. And right now momentum is down because stock has dropped big time. And look, implied volatility is now it's cooling off after the earnings, but still high IV percentile. You could make some good money selling some put spread under the stock price. And look, right now DMI chart, look, red line wants to go higher, blue line wants to come down. The gap is significant. That tells you right now it's completely bearish. On the balance volume is negative, coming down, and check-in money flow is came down big time, and now it's stabilizing. I think at these levels the severe punishment for Amazon is almost baked in. I'll be slowly jumping in and buying some Amazon share. All right, now let's look at a quick snapshot here. Look, it's a $1.4 trillion company, and share price is about $2,800. And look, it's a very strong buy from analyst perspective. And revenue per employee is $292,000. Not great because they got a lot of warehouses, and there are a lot of non-technology workers. That's why it's a little bit low compared to Apple. Look, stock has been struggling, as you can see here. They've been down in year to date, 1 year. They're down nicely from 52-week high, completely in the correction territory. But 2-year, 5-year, 10-year stock has done great, handily beat S&P 500. Look, the sales perspective, they got nice sales growth here, 5-year and yearly, quarter-over-quarter, nice sales growth here. And the expectation for next year sales growth is nice and high. And next year EPS growth is also good here. So analysts are generally bullish about this company. And gross margin is nice, good gross margin here, 14%. Net margin is 7%, which is pretty okay. It's like a money-making company. And as you scan through here, we got your technical rating, sell. So it tells you analysts are saying buy, technical charts are saying sell. So that's why it's a good divergence. It's okay to slowly start buying some Amazon.com due to this drop off here. Look, from a Morningstar grading perspective, gets a B grade in health financials and B grade in growth and B grade in profitability. That's great here. And overall score is 68. I think it's a good one to buy at these levels. All right, now let's look at Amazon by yearly numbers. Look, from a sales perspective, this company is doing nicely. Nice clip. Sales is growing. Top line is growing. And earnings per share is also nice here. I think we got earnings per share here again. Both are same, but earnings per share is increasing, as you can see here. And shares outstanding is pretty constant here. No need to worry. Company is not diluting the share count. Operating margin is going higher nicely. Now I think it came down slightly in 2022. That's the concern for Wall Street. That's one of the reasons stock came down. Net margin is going higher nicely. That's great. And this company is also reducing its debt to equity. That's a great sign here. So company doing the right thing here, growing the top line and trying to improve the bottom line net margin here and paying down the debt, which is good. All right, now let's look at quarterly numbers. From a quarterly number perspective, look, the stock, the market cap was $1.6 trillion back in 12/31, and it came down to $1.47 trillion after this huge big drop here. And stock price came down severely. It was $3,300. Now it's $2,400. So stock dropped after the quarterly earnings. And look, from a sales perspective, this company is doing well. They got nice sales growth here, nice quarter-over-quarter top line surprise to Wall Street. On the EPS side here, look, they're also doing pretty well on the EPS side, not too bad. All right, as you look through here, total debt, they got a lot of cash in the balance sheet. The cash improved from prior quarter. Total debt is also pretty okay, slightly increased as you can see here. Debt to equity ratio is 0.8. That tells you debt to equity ratio has come down. And as you scan through here, you got free cash flow positive. That's great. Operating cash flow positive, and net margin is also positive as you can see here. And look, company is not paying dividend yet, but I think overall they're doing well. And earnings per share is a little high. Amazon earnings per share is always high, but price to sales is pretty low. That tells you stock is not pricey. All right, now let's look at the quarterly earning. So this is what went on here. We had Q1 quarterly earning. Look what happened. They missed on the earnings per share, and they also missed on the quarterly revenue. The moment you miss on both and give some tepid outlook, that's why stock came tumbling down here. But I've seen Amazon doing this, a couple of times in the past. Look, we got earnings miss here, one more earning miss. We got EPS miss right here, and you could see some more EPS miss right here, and one more. So Amazon is not concerned about this. I think it's a, they will basically state what it is, which is always good. So this could be a, huge punishment for Amazon, or be slowly picking up some share. It dropped so much, and this is a great company. All right, now let's look at the analyst upgrade and downgrade. Look, we had the analyst, we had the quarterly earning. After the quarterly earning, we have a buy rating from this analyst here, but the price target came down for 4,500 to 3,700. So that's a price target reduction. That means, analysts are not that bullish about the stock here. All right, now let's look at what should we do now. Look, Amazon.com, they post a net loss, $3.8 billion, and the revenue met the expectation. And Amazon suffers, worst one day in more than 15 years, wiping out $200 billion market cap. And their results are a miss here. The EPS miss, revenue miss, and the revenue guidance also bombs. That's why stock came down big time. And on the positive side, look, Amazon can easily increase the price of its Prime, and thereby it can pass all the inflation-related concern to the consumers. And they got here AWS, Amazon Web Services. This is growing very, very fast. So this can also help the company to boost profitability. And Amazon.com is a clear leader in e-commerce, and they have very strong growth engine in e-commerce and very good customer experience. So that's one of the good catalysts for this stock here. So given the stock is down big time, I say take advantage and buy Amazon.com after this severe pullback and accumulate. So with that, thank you very much. Happy investing and trading. Please